Hello guys, good morning. Hope you are good. Hope you are good. This is Peter, your lead instructor for Peetas Orb Academy. So today we are going to be learning something profound. Please make sure you watch this video to the very end, alright? You know how we do it. We make it very, very simple. This video should not last more than 10 minutes, alright? So all right, let's see. So in today's class, we're going to be considering a very, very powerful topic. Let's see. Okay, minutes. All right, so okay. All right, that's what we'll be considering today is a very, very powerful topic. Let's see how much we can be able to do with it. All right. So we want to consider a entry model today that is not a common entry model. A lot of people have been focused about other blocks and everything. Truly, if you are taking other blocks, you have wanted to take this trade here. You have wanted to take maybe like a buy from this point here. You would have made this entry. You would have made this entry. You would have been able to get a sniper entry from this place to secure a buy. And if you did not understand what made me to say, okay, this other block is going to work here, go and check the previous video I dropped, the last video I dropped, which is high probability order block. You're able to see that many of the criteria are listed for order block is here. There's huge momentum candles. It will mark the last bearish candle. It was the last bearish candle we marked. All right. And also, this other block led to, let's call it a change of character around this point. Let's say a change of character around this point. All right. So the other block led to a change of character there. So, but I just feel there's still more to it. And then there was no liquidity form, but market came to engineer a liquidity around there. My next topic, I'm going to be teaching about engineered liquidity so that you'll be able to understand what engineered liquidity is. Going to engineer a liquidity here. But you see, in case you miss this entry, now this is another way to enter a trade. Let's say we did not even see another block around this place here and we intended to take this trade. And this is where the market is currently. This is where the market is currently. Now, what we are more concerned about, looking from this structure, let me just take it to maybe like a 45 minutes time frame. All right. Looking from here, this look like a bearish trend. All right. So what we just expect is that we expect this high because all these things here, the market formed like a range structure around there. It's just ranging here. And there's this thing I've always been saying in some of my videos. There's something we call the power of three. The power of three, where you see the accumulation, market will accumulate at a particular point, keep accumulating within a range. When you keep accumulating, then the next thing, the market will manipulate to the downward direction, then distribute to the upward direction or expand. The same way, vice versa, it happens. That the market will just accumulate, form like a range, accumulating buy and sell orders at the same time. Then the next thing, it will now manipulate to maybe the upside, taking out the people that are taking a sell, hit their stop loss, and then distribute to the downward direction. Taking out the stop loss of them that the people that entered a buy order. So if they entered a buy order, they would have put their stop loss just below this place here. So they will put their stop loss maybe somewhere here. So you see that either way, nobody will be in the market. The buyers will not be in the market. The sellers will not be in the market because both of them, their stop loss will be hit. Do you get what I'm saying? So yes, now where we now try to because that is what I saw here. But that is not even the main purpose for this video. I'll make that one as a separate teaching on its own to give you more details about it. So we expect now the market has done a manipulation to the downward direction. Now, we need a distribution. Now, this is the swing eye here. The swing eye. This is the swing eye here. We expect this swing eye to be broken. Anytime the market breaks this swing eye, market has confirmed that it's going to be an uptrend. Sometimes you need to be a patient trader. Trading is 10% wait, 10% buying, 10% selling, and 80% waiting. All right. So when market breaks this high, because this is our swing high, every other thing that happens inside of this place are internal structure. Why this place here is our swing low. This place here, this place that this candlestick stop, where this weak rejection stop, is our swing low. All right. So our expectation is that if market breaks this swing high, it confirms our bullish bias. Are you getting what I'm saying? So if market breaks that high, confirms that this is going to be a bullish movement. So let's continue. So our expectation is that for market to break this high. All right. So now market, I want to be sure this thing is recording. Okay, let's continue. So we expect that this market should break this high. The market break this high, it has confirmed that our buy is actually going to work. Then let's just play the chart to see. Okay, are you getting me? Sorry, let me come again. I said something. I said we expect the market should break this high. We expect market to break this high. When market break this high, it confirms our bullish movement. So when market break this high, it confirms that the market is actually going to buy, because now every other thing that happened here is like a range. Then the market manipulated to the downward direction. Now we expect a distribution to the upward direction that will break this high. Do you get what I'm saying? So when it breaks this high, it actually confirms that this is going to be a bullish movement, because this is the swing high. Until this swing high is taken out, before we believe that this thing is no longer a downtrend. Do you get? So people rush into trade. They say, if you take it out, I would have missed the trade now. No, 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 that's not how it is done. You have to be patient. So now let's just see. Okay. Yes, exactly. Now you can see the market has broken it. You can see the market has broken it. Market has closed above the previous high here. And then that is very, very good. The next thing, you have seen liquidity here. This is liquidity. When you see equal lows are liquidity. This equal low here is liquidity. This equal low here is liquidity. So you mark your liquidity. Just go and make sure you mark out this thing to know all the things that you need to know to be able to trust another block. For this example, say we are not even using another block. We are using Quasimodo. There's something we call Quasimodo. 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 What is Quasimodo? This is the strategy for Quasimodo. Now, one thing I want you to first know is that there cannot be a Quasimodo without a sweep and a break. This is what I mean. When market forms a low, market sweeps the previous low, then breaks the previous high. So it is not possible to have a Quasimodo without a sweep and a break. Then expect market to come and form your liquidity here. The market forms your liquidity there. What you're expecting is that, sorry, you don't expect that this pullback that came here, this pullback, which is our liquidity, oh, sorry. This our liquidity must not fall into this previous low that was swept. Do you get what I'm saying? This is what I'm explaining here. For Quasimodo, it is the other block that failed to hold. The other block that failed to hold, this other block here, is our Quasimodo. That means this bearish order block here is the one we are concerned about. This bullish order block, rather, that was supposed to hold price above this thing, but market now broke it. How Quasimodo is actually known is that after the order block was formed, market will break it first time, second time. If market forms a liquidity that did not tap it, then you have seen a golden entry. Just wait for market to come and clear the liquidity, tap your Quasimodo and start going up. This video, you have to watch it like 2-3 times to be able to get what I'm explaining. So for the purpose of this thing, you'll be able to understand that for this Quasimodo, we are trying to look now, there's a pile of liquidity around here that we are expecting that market should come and clear. But eventually market cleared this and went up. And this pullback that came did not actually tap them. Where is the lowest point at this market? Let's use this place. The nearest one. Let's use this place. Or okay, this one mitigated it. Let's use this place. So you'll be able to understand how Quasimodo really work. You can see what I just did. I marked the candlestick around that point there. I marked this candlestick. Let me pick it up again. Take it up. Yes. It's this candlestick that was here that failed to hold because market eventually came to break it. That is the one we are using for our Quasimodo. And what is the expectation? We want market to come, clear the liquidity, tap our Quasimodo block, and then start going up. So for this kind of trade, you don't need a big stop loss because why? If market takes it out, it means that market is not going to respect it. So why using a big stop loss? But this kind of trade, just put your entry around the beginning of that block and put your stop loss just a little bit below it. And then target the previous high, this previous high here. Do you get what this is? 1 to 5 risk to reward trade. Do you get what I just did here? This is what I just did. This is the formula. Just that for this scenario, this one formed like it formed like a equal low. After forming an equal low, then we expect market to come and clear it up. We take our entry from this point here and then target the previous high. That's what we are expecting for this trade. That's Quasimodo. I'm going to draw the pattern after this video so that you'll be able to, after this explanation, so that you'll be able to get it. Let's see what the market eventually did. Now you could see the market formed a triple bottom. And triple bottom is also a type of liquidity. Thereby confirming that our entry is going to hold. Triple bottom. Wow. What do you see? The TP has been hit. The market cleared the TP. This formula actually works every time. It works every time. Just as some of us don't really this is the formula. I want you to pause the video and then screenshot it so that you have it in mind. This is what I explained. Let's say a market forming something like this. Then the next thing, markets now swept the previous low and then broke the previous high. When it does this, you have seen a sweep of this previous low. This is a sweep of liquidity. That means that previous low. I'm going to do an advanced video about liquidity so you'll be able to understand that every corner of the market, there is liquidity there. And this is a break. So what you're more concerned about is that low that was swept, mark the last bearish candle around that place. Mark it. Now, if the market now makes a pullback, and the pullback taps this place, that means when market comes back, market is not going to use that Quasimodo. The market is going to use the other block below here. And the market is going to use it and start going up. But in this scenario, if you see a pullback that comes, that did not tap this place and goes back, expect that market will come and clear. That market will use that one as liquidity. Market will clear it, tap your other block, and start going up. Do you get what I'm saying? But for this example that we just did, the market formed an equal low liquidity before your Quasimodo block. Formed an equal low liquidity. In fact, it got to a point, it formed a triple bottom before it now came to clear it, tap your other block, cleared it. So people will be positioning their order around there. But the market now cleared them and then went up. This Quasimodo works very, very well. In fact, I want you to watch it. Look at this to show you how perfect this thing actually is. You'll be able to see sniper entry trade. Sniper entry. Let me change it to 1 hour time frame. So you'll be able to see how perfect it actually looks. See? Now let me cancel the replay. Let me go and show you. I think there's an analysis I did. The same strategy. Let me check on Ethereum. I think I did the same strategy on Ethereum. Now that's the same thing I'm expecting here too. On Ethereum, this is what I'm expecting. You could see that the market formed a low, formed an high. Market now swept the previous low and broke the previous high. The market has come to form a liquidity here. So what am I expecting? I'm expecting market to come and sweep this liquidity, tap my Quasimodo block and hit TP. That's what I'm expecting. Do you get what I'm saying? You can see that that's the same strategy I used there. Let me show you another trade. I think AUD card. Did I do it on AUD card? Yes, that's the same thing I did on AUD card. The same formula. Once you have found a strategy that works for you, my brother, use it. This market came to form equal low here, then the market went up, swept the equal low that is here, then broke this previous high. It broke it up. You understand? So after I broke it up, this last pullback that was here becomes our liquidity. So what am I expecting? I'm expecting market to come down, clear this liquidity, and hit my TP. Do you get what I'm saying? So this break of structure here actually confirms that buyers have already stepped in. So what I'm just expecting is a pullback that will come down, come and pick the remaining orders that are around here, then market will start going up. Do you get what I'm saying? So I just feel if you'd be able to get this strategy, it will really work for you. It will really work for you. I think, was it the strategy I used for USD JPY? Let me see. I think it was the same strategy I used for USD JPY. I think so. Where did I do it? I think I did it on USD JPY. Let me see. Fast time frame. Yes, I remember. This is the analysis. The market formed an high. It came back. The market swept it, and then came down, formed the liquidity. I think go and check my last video. Is this USD JPY that I used for the example? You're able to get it. So I think that's where I'll be stopping this video so it will not be too long. So please make sure that you watch this video at least once, twice. And what I'm expecting is that record and actually do an analysis with this strategy and send to me on WhatsApp. I want or drop it on the private mentorship group. So we'll be able to get, I'll be able to correct if you did anything wrong. So see you guys in the next class.